Hi, this is TJ for the 7 Summits Trader Pro. Recently, a lot of people have been asking me how I'm able to come up with so many great trade plans for so many individual markets so quickly. For example, this end-of-day trade plan for the US Swissy, which just recently appeared on the Owners Club. I mean, check out these totals over the last few years. This is using 3 positions, which is what I like to test for, over the last 105 trades. It's won 73% of its trades, its average net profit over $1,500 per trade. Look at the average win versus average loss, 2.19. I mean, that's pretty spectacular. Most of the profits have been made on the short side with a 10.4 profit factor. How do I come up with this stuff? Well, that's actually the subject of this video, the 7 Summits Trader Pro automation. In this video, I'm going to show you how I use this powerful tool to create a trade plan. In fact, we're going to create one together. And if all goes well, this will be a trade plan that appears on the Owners Club in the not too distant future. Creating trade plans can be a long and arduous task with lots of trial and error, frustration, etc. But I do have a few tricks up my sleeve, and I have many tried and true ways of doing things that I have learned over the years that I can fall back on. Certain things that just tend to work. First off, I have to begin by answering some key questions. For example, what market? What market am I going to test and why? And then how about some basic information? Things that lead me in the direction of entries, targets, stops, how many positions I want to trade, that sort of thing. Of course, nothing can substitute the wealth of knowledge that one gains from good old-fashioned manual backtesting. I know most of you really don't want to hear this, but even with the automation tool, backtesting is still important. Clicking through the charts, posting trades in a data log, on a spreadsheet that has been pre-programmed to give you details about your trades, nothing can substitute that. I still do it a lot, all the time. It keeps me sharp and keeps me touching and feeling my trades in a way that is critical for my success. However, that being said, I'm also going to take advantage of any tool I can that's going to save me time and that's going to get me onto a winning track as quickly and expediently as possible. The tool that I use is the SST Pro automation tool for TradeStation. This tool has helped me create so many winning trade plans. How? Well, many ways. But in this particular video, I'm going to talk to you about the 3 most important parts of a trade. Yeah, you should know what they are: entries, targets, and stops. Let's start with entries. When creating a trade plan, it's critical to get the entries right. How do you know when and where to enter a trade? If you make them too tight, you get into trades without enough confirmation, which leads to trading in noisy, choppy price action. This leads to losses. It's impossible to get the perfect entry for every single setup, but we don't need to. All we need to get is good enough. An entry that is good enough to avoid most of the chop and most of the noise, and by asking for just the right amount of confirmation. And what do I mean by confirmation, you might ask? Well, quite frankly, it's the distance a breakout move needs to travel so that it confirms that the odds are in our favor that the move will continue, without leaving too much on the table. If you set it too tight, you're going to get into trades that just don't have enough to go the distance, and they're going to end up going the other way and stopping you out. But if you set it too far away, you not only give up some profit potential, but you run the risk of getting into the move too late, which also leads to losses. We don't want to be Johnny-come-lately. We want to get into the trade at the right time. Why do you think most traders fail? Well, this is one of the reasons. They don't know how to get in or when to get into their trades. But we can use the SST Pro automation tool to help us hone in on the best entry for the market and time frame we're interested in trading. I can't emphasize enough how important this one aspect is to creating a successful trade plan: getting the entries right. If getting the entries right is tough, what about targets? Exiting a trade is perhaps the hardest part of trading. How do you know when to get out of a trade? On the profitable side, we all know it's wise to let our profits run. But if we get too greedy, we risk that the market's going to turn in the other direction and we'll give away our hard-earned gains. We'll give it right back to the market. But if we get out too soon, we miss the reason that we're in the trade to begin with. We have to get the most out of each trade to carry us when we lose on a trade. I mean, let's face it, the best defense is a good offense. so it cannot be overstated how important profits are to your success. Of course, not just for the obvious reasons, being that it's the reason we're trading in the first place, but what about the more subtle and critical reason? Because when we lose, we need to lose less than when we win. That's how we're really going to make money as traders. In other words, we need to make more on our winning trades than we lose on our losing trades. So it's important to know where to have those targets, and it's important to be able to move with the market. Markets are dynamic. We can't impose what we want on the market. That's not going to work. We have to take what the market wants to give us. But how do we do that? Again, the SST Pro automation is the answer. In a little while, I'm going to show you how. But first, let's talk about the third element, stops. How do we know where to place our stops? We need to risk the proper amount. But what is that? As I said, markets are dynamic. They're going to do what they want to do. First of all, we need to give the trade the room that it needs to develop. If our stops are too tight, we run the risk of getting bounced out of the trade too soon with losses right before it moves in the direction of our original target. Nothing is more frustrating. So many traders say they only want to risk 1 for every 3 that they hope to gain. In a perfect world, I would agree. I mean, who wouldn't want to risk $1 to make $3? But how realistic is that? How many of those traders are actually succeeding? Sometimes it pays more to be a bit more flexible. Let's get an advantageous risk-reward ratio, but let's do it in a dynamic, fluid way. We have to learn how to dance with the market. I like that term, dancing with the market. It explains the necessity of coordination and flexibility and the ability to be fluid and to go with the flow. Markets need time to develop. The market is continually changing its shape and form. We need to give our trades enough time to develop in order to succeed. But we don't want to risk too much either. We still want to have the odds in our favor. So placing our stops at the proper level is important, but also what do we do with the stops once the trade begins to develop? We have to know what to do in that case as well. If you move it too quickly, again, you run the risk of getting out of the trade too soon. If you don't move it quick enough, you run the risk of giving back your profits. This is why trading is so difficult. Why do you think most traders fail? We can't possibly know what's going to happen next. What we can do is take control of our trading by putting the odds in our favor, bar after bar after bar. How do we do that? Well, at first, we have to come up with a trade plan that tells us what to do and when. The SST Pro automation is the tool we're going to use to discover the secrets of how to manage our trade properly from the beginning to the end, trade after trade, in a way that's going to put the odds in our favor and grow our accounts as we continue to trade over time. With the SST Pro, we can discover the best place for our entry, targets, and stops on every single trade for the market and time frame that we're interested in. In this video, I'm going to walk you through the process of creating a trade plan using the SST Pro automation tools. In fact, we're going to do this together. So without any further waste of time, let's begin right now. Alright, so we're going to begin by actually selecting our market. Now, I've been working on end-of-day Forex trade plans, and I'm not finished. I want to get several more. It's good to have at least anywhere from 10 to 15, maybe even 20 pairs with end-of-day trade plans in order to remain active. Each end-of-day plan is going to give you anywhere from 1 to 3 trades a month. But if you've got a dozen of them or even more, then there's a good chance you'll have several trades every single week. Now, just looking down the list of trade plans that we have already on the Owners Club, you'll notice that I really don't have any Euro crosses or any Euro pairs for end of day. I've got a 4-hour chart. We definitely have our 5-minute trade plan and a 15-minute plan, but I'm working on end of day. I don't have any Euro pairs. Now, I'm definitely going to create one for the Euro US, but I'm going to do something different for this video. I decided we're going to try to create a trade plan for the Euro Aussie, and the reason why is because this has been requested from one of our members, And after reviewing the chart, just at first glance, it really looks like it trends nicely. And for long-term end-of-day trade plans, a trending market is excellent for utilizing some of the great features of the SST Pro. Just taking a look at it, you can see that it really has nice movement. Not a lot of chop. So let's create a trade plan for the Euro Aussie. Now there's two approaches. One, we can put on the standard strategy and calculator with the default settings, and that's a pretty easy thing to do. Or one of the techniques I like to use is to select a trade plan that is already successful, or maybe even several, and apply them to this chart and see if we can come up with something that's close to what we've already created. Sometimes you can get really lucky, and by taking an already existing trade plan and trying it out on another chart, you end up striking oil or hitting the gold mine. So let's do that. Let's experiment a little bit. One of the cool features in TradeStation is that you could save a group of analysis techniques and strategies. And so I've done that for each of the 7 trade plans on the Owners Club. So if I right-click on the chart, I can go to Insert Analysis Group and scroll down. Let's look at the first one, which was the British pound. That's the one that I've been using as a model for the rest. And let's take a look and see how this would have done over the last 5 years if we had this exact same plan on this chart. All right, so you can see some trades here. Let's take a look at the performance report. All right, so a quick examination of the performance report over the last 5 years. You know, it's not that impressive, but it's not terrible. It's positive already without doing anything. Not that positive, not positive enough, but it could be a good starting point. It's won 60+% of its trades. This could be improved upon. So let's make note of the pound US as a possible contender. Meanwhile, let's look at a few more for comparison. All right, so let's take a look at our US Swiss strategy and see what that does. We'll replace this one. Let's try target mode 2, a trade setup mode 2. All right, again, you can see some nice winning trades here. This is looking pretty encouraging. The calculator is matching the strategy. Wow, you see, big difference. The winning percentage went down a little, but it's very profitable already. And this is just a starting point. We haven't even begun making any adjustments to the settings or using the power of the automation. But let's write this down. US Swiss version 2 as a possible contender. Let's look at a couple more just for argument's sake. All right, well, this is an Aussie pair. Let's look at the Aussie Swiss and see if we might be able to do better. Take a look at the report. Okay, well, this one maybe not as profitable right out the gate, but I like this winning percentage, over 71 or nearly 71%. But what I don't like about this one is that it's lopsided. It did really well on the short side, didn't really do anything. In fact, it lost money on the long side. So I want to keep looking. We know already that we've got one good contender with the US Swiss. Let's try one more. Let's look at another Aussie pair. All right, this time I want to look at an Aussie yen. We just looked at the Aussie Swiss. Let's check out the Aussie yen. So hopefully we'll be able to improve. I do see a lot of trades in here. Let's look at the report. All right, well, look at this. This is really something else. This is still a little lopsided, but a lot more profitable. $222 average trade. We could probably work with this to improve these numbers. So this one's looking pretty good. So let's look at one more piece of information that might help us shine a light on this. If we look at the performance graph, this reveals a lot as well, because the first couple years, first 100 trades or so, it was in drawdown, and then it recovered really nicely. So the 3 years ago, look at how far it's come from a negative all the way up to this positive. It's been really strong. I like this. I like this chart. Looks like it's ready to break out to new profit levels as well. And just for curiosity, this is looking back 5 years. What if we look back 3 years just to see what the numbers look like? Nice rise in equity that we just saw. Wow, look at that. So this trade plan has really produced over the last 3 years. So we're going to set it back to 5 and let's see if we can come up with a trade plan that's going to be suitable for this pair. All right, so what we're going to do first is try to come up with the best entry. And so we're going to start looking at different settings for our breakout. You right click on the chart, go to Format Strategies, Format button, and we're interested in testing the breakout incremental. Before we do, I want to look and see what would happen if we change our trade setup mode. Remember, there's two modes. This is the channel mode. If we go to 2, we're using the incremental mode. Let's see how this affects our report. Remember, over the last 5 years, we did about $67,000 in profit, give or take. If we change this to trade setup mode 2, wow, that's a big difference. Look at how it increased the profitability, nearly $30,000. And that's great. So what I'm going to do is I'm going to copy this chart and I'm going to save it. And then later, I'm going to go back and work on a new trade plan using trade setup mode 2, and then we'll have two plans to compare. But for this video, I'm going to stick with trade setup mode 1. We're going to see if we can improve our results, see if we can come up with a good trade plan. So I'm going to change that back. We'll set that to 1, and then we're going to test this here, and we're going to use this optimize button, and we're going to test between 0.1 and 1.0 at 0.01 increments. Let the automation do all the heavy lifting for us. It's going to look at the trades over the last 5 years with a variety of different entry breakout settings. And then it's going to give us a report, and we'll be able to analyze and see where the best one was. All right, so now we're looking at the optimization report. And let's find and see what it's selected for us. And we can see down here at the bottom that it selected 0.12 as our breakout. That gave us the best profitability. You can see the net profitability is all the way up to 73,000. So it's quite a bit better than the 67 or 64,000, whatever the other one was. And you could also see that it's in either direction, a little bit below and a little bit above. It's positive. So this is very good. So we're going to go ahead and select 0.12 as our breakout incremental. And here you can see on the performance report. All right, so that's good. Now I'm going to test for our initial stop level. So I've opened up our format window, and what I'm showing you is the process that I do when I create a trade plan. This one has the initial trailing ticks at -50. That means -5 pips. So this means it's going to put our stop 5 pips above the opposite side of the channel. I don't know if that's going to be the best place for this particular chart. So let's optimize it. Let's look at 30 pips below the channel. This will be actually 30 pips above the channel to 30 pips below the channel. Okay, it's contrary. And we'll look at 1 pip increments. So I have to set it to 10 for 10 ticks to account for the extra digit. May seem like a lot, but this is going to go really fast. So let's run this test. All right, well, this is eye-popping. The value that it selected, and we'll look and see what that is in a moment, increased the profitability all the way up to $112,000. That's phenomenal. And remember, these are Aussie dollars. Got it set to Aussie dollars. 112,000. Quite a big jump. Let's look at the optimization report. And we have to go down and find that what it selected. And it actually wants to put the stop 27 pips above the opposite side of the channel. Okay, that's very interesting. It doesn't go below the channel or on the opposite side. It's actually inside the channel by 27 pips. And that's very interesting. So we're going to keep that setting. Look at how every setting gives you a nice positive result. Every single one. But the best result was the -270 number. So we're going to use that. Let's go to the next test.